Top 7 most tradable currency pairs. Name a market that never closes during the working week, has the largest volume of the world's business, with people from every country of the world participating every day. Yes, you guessed right. The foreign exchange market, Forex, where all trade is between currency pairs of two different countries. This is called Forex currency trading. Unlike stock trading, the Forex market is open for the majority of the business week, due to differences in time zones. This can make effective trading a more viable option for those who work during the standard exchange hours of 9:30 a.m. to 4 p.m. Here's a look at what are the most traded Forex pairs in the world. Euro-USD. This can be considered the most popular Forex pair. Additionally, it has the lowest spread among modern world Forex brokers. It is associated with basic technical analysis. The best thing about Euro-USD is that it is not too volatile. Therefore, if you are a trader who does not like being in the position of taking too much risk, this might be one of your best options for trading Forex. Furthermore, given its popularity, you can find a lot of information online about the Euro-USD, which can help prevent you from making avoidable mistakes. The high daily volume of Euro-USD transactions ensures that the pair has a lot of liquidity, which generally results in tight spreads. Liquidity and tight spreads are enticing for traders because they mean that large trades can be made with little impact on the market. USD, JPY. Also known as the gopher, the USD, JPY currency pair is made up of the US dollar and the Japanese yen. Similar to Euro-USD, USD, JPY is known for its high liquidity, something it gets from the fact that the yen is the most heavily traded currency in Asia, and the US dollar is the most commonly traded currency in the world. This pair has been sensitive to political sentiment between the United States and the Far East. The pair tends to be positively correlated to the USD, CHF and USD, CAD currency pairs due to the US dollar being the base currency in all three pairs. GBP, USD. The GBP-USD pair tends to have a negative correlation with the USD, CHF and a positive correlation to the Euro-USD. This is due to the positive correlation between the British pound, the Swiss franc, and the euro. Like with most other currency pairs, the strength of GBP-USD comes from the respective strength of the British and American economies. If the British economy is growing at a faster rate than that of America, it is likely the pound will strengthen against the dollar. However, if the American economy is doing better than the British economy, the reverse is true. AUD, USD. AUD, USD, sometimes referred to as the Aussie, represents the Australian dollar against the US dollar. The value of the Australian dollar is tied closely to the value of its exports, with metal and mineral exports such as iron ore and coal accounting for a large proportion of the country's gross domestic product, GDP. The AUD-USD currency pair tends to have a negative correlation with the USD, CHF, and USD, JPY pairs due to the US dollar being the quote currency in these cases. The correlation with the USD CAD is also because both the Canadian and Australian dollars share a positive correlation with each other as both are commodity block currencies.
USD CAD. The strength of the Canadian dollar is closely linked to the price of oil because oil is Canada's main export. Since oil is priced in US dollars on the world markets, Canada can earn a large supply of US dollars through its oil exports. As such, if the price of oil rises, it is likely that the value of the Canadian dollar will strengthen compared to the US dollar. The USD-CAD currency pair tends to be negatively correlated with the AUD-USD, GBP-USD, and EUR-USD pairs due to the US dollar being the quote currency in these other pairs. USD-CNY. The USD-CNY currency pair represents the relationship between the US dollar and the Chinese renminbi, more commonly known as the yuan. In recent years, it has represented about 4% of daily Forex trades. The yuan has largely been decreasing relative to the US dollar since the start of the US-China trade war. This has been due in part to the Chinese government, which has let the yuan depreciate in the knowledge that this will make the country's exports cheaper and increase their already sizable market share in countries other than the US. USD, CHF. The USD-CHF currency pair is made up of the US dollar and the Swiss franc and is commonly known as the Swissy. USD-CHF is a popular currency pair because the Swiss financial system has historically been a safe haven for investors and their capital. As a result, traders often turn to CHF during times of increasing market volatility, but the Swiss franc will typically see less interest from traders during times of greater market stability. During times of increased volatility, it is likely the price of this pair would drop as CHF strengthens against the USD after experiencing increased investment.